Hello, my name is Rachel from kalkinemedia. Please subscribe to our channel and press the bell icon for notifications for our latest videos. Now, daily use essentials are poor regardless of economic conditions. The demand for consumer staples such as food and beverages, household essentials and alcohol is almost constant. Consumer staples demand has stood firm even during pandemic peaks. People bought them online and some even started hoarding these goods. Because of its nature, the consumer staples sector is therefore a preferred sector for investors, especially during recessionary phases. The two most popular ways to invest in consumer staples are consumer staple stocks, that is, buying shares of companies in the consumer staples value chain. Another way is consumer staples ETFs, for taking exposure not to just one stock, but to the entire sector. So what should you look for in consumer staple stocks? Well, when investing in this sector stocks, the top four things that matter are the history of the company, that is, and also the ability to thrive in harsh economic conditions, also dividend yield and consistent sales growth, and a reasonable valuation. In light of these facts, let's take a look at 5 exciting consumer staple stocks listed on the ASX. First up is Metcash. Now, Metcash provides marketing and operational support to independent local retailers such as food, liquor and hardware. They've been operating since 1927, and the company has expanded its reach to around 90,000 wholesale and 10,000 retail distributors. Metcash claims to have the broadest retail distribution network in Australia. For the year ending the 30th of April, group sales rose 10.1% and underlying hardware sales rose 24.7%. As a result, profit increased by 27.1% against the last fiscal year, and EBIT grew 19.9% with solid volume. On the 23rd of July, their shares closed at $4.01. That was up 0.75%. The company has been regularly paying dividends, and its current annual dividend yield is 4.36%. The 52-week return is 45.818. Moving on now, the Woolworths Group is Australia's oldest homegrown retail chain giant. It owns supermarkets, marts, liquor stores and hotels. Woolworths Group's third quarter sales were up 0.4% compared to the third quarter financial year 2020. However, group e-commerce sales grew significantly, up 64.2% versus the third quarter of financial year 2020. On the 1st of July this year, they demerged their drinks business called the Endeavour Group. On the 23rd of July, Woolworths shares closed at $39.52. That was up 0.893%. The company has been paying regular dividends since 2011, and its current annual dividend yield is 2.25%. Their 52-week return is 15.86%. Now, GrainCorp provides grain storage, handling, freight and marketing services on Australia's east coast. For more than 100 years, it's been connecting Australian producers and domestic and international customers. They have a market capitalisation of $1.19 billion on the ASX. GrainCorp also reported a solid first half financial year 2021 performance, with impressive growth in underlying EBITDA and earnings in both agribusiness and processing segments. On the 13th of May this year, GrainCorp announced a half-yearly fully franked dividend of 8 cents per share. The current annual dividend yield stands at 2.79%. On the 23rd of July, GrainCorp shares closed at $5.36, up 0.374%. The 52-week return is 38.501%. Moving on, the Ingham Group is a poultry producer from Sydney. It claims to have an unrivaled network of processing and distribution facilities across Australia and New Zealand. It listed on the ASX back in 2013, and they have a market cap of $1.44 billion. Ingham's pays regular dividends, with the last dividend of 7.5 cents per share declared in April 2021. Ingham shares have given a 6% 6.9% average dividend yield in the past 5 years. In its financial year 2021 earnings guidance, Ingham's reported that it expects statutory EBITDA in the range of $438 to $448 million and statutory NPAT between $80 and $87 million. The company also anticipates these stats to exceed the consensus provided. On the 23rd of July, Ingham shares closed at $3.91, up 0.256%. Their 52-week return is 20.308%. And lastly, the owners of Dan Murphy's and BWS stores, the Endeavour Group, has the nation's most extensive portfolio of licensed hospitality venues. The company demerged from the Woolworths Group recently. The company team is supported by the Pinnacle Drinks brand and manufacturing business. Their shares started trading on the ASX on the 24th of June this year, and they've gone up 34 cents per share since then. Woolworths is still a substantial shareholder in the Endeavour Group with 14.6% shares. Other prominent shareholders are JP Morgan Nominees Australia and HSBC Custody Nominees. Endeavour continues the legacy of Woolworths drinks and hotel business. Its shares trade on the ASX at $6.36 as at the 20th of July. Endeavour shares started trading on the 24th of June 2021 at $6.44 and have gone up 42 cents since then. Now, if you like this information, please like, share and comment on the video and subscribe to our YouTube channel. Press the bell icon for notifications for our latest videos. For more information, log on to our website, kalkinemedia.com. I'm Rachel, signing off for now.